Earnings season, though, was generally, as you say, better than feared. So, as you say, 51% of companies beat expectations, but actually 2/3 of companies beat or met expectations. And when you dig beneath the surface, what is particularly interesting is actually the margin strength across European companies during the quarter. And what that's indicative of is that companies are so far managing to hold on to many of the price increases they pushed through during that COVID period. So as deflation or inflationary pressures are reducing, companies are holding on to those pricing gains, which is benefiting the margin line.
Yeah, one would ask, though, at the same time that if all of that is happening and then you still have valuations spiking ultimately in the United States, that not necessarily happening this side, you would think that there's still more value for your buck out of Europe. Why is that still not getting the kind of traction one would think in this market?
That's been a recurrent theme for many years now, and you're absolutely right. The US has consistently outperformed Europe, but in the short term, Europe does actually have good momentum. In Europe, we're currently seeing much more earnings upgrades than we are in any other region globally currently. PMIs are encouraging, admittedly from a low base in Europe. And the ECB is probably likely to be the first central bank to lower rates next month. But longer term, for investors like ourselves that are bottom up and focus on the companies, it's really about identifying those few brilliant companies that are based in Europe that really are world leading. And you've got companies here like ASML, Novo Nordisk, that I think are as good as any company overseas.
I want to pick up on your first point to us in your research, saying, is it possible to play AI in Europe? I spent all last week at Vivatech trying to write down every startup in Europe that was attracting funds, that really had an interesting story to tell. There were only a handful really at this point. But when you look at it at scale, how can you play AI through markets?
It's a great question, and clearly NVIDIA grabs all the AI headlines, and rightly so, considering the results they've had over the last 18 months. But AI is much more than NVIDIA or chips itself. And to play the AI theme, it's the whole ecosystem. With AI, you need many more data centers, and with data centers, you need much more power consumption, which means more chips, more cables, more transformers, more switch gears, more investments in the grid. And while Europe may not have an NVIDIA per se, it is very strong in the broader AI ecosystem. And so there are many ways to play that theme without having to bet the house on one single company.
So talk to us about AI hype. So one player said to me, look, we really are at peak AI hype at this stage. How do you separate out the noise and ensure that you really do have the right bets for the long term?
Yeah, AI has certainly been the theme of the year, and I think NVIDIA in the earnings call pointed out to the fact that there's 15,000 to 20,000 new generative AI startups recently alone. And many of those companies will probably not be here in 10 years' time. And the vast majority of those will certainly not be revenue generating today. The way we are playing it is really trying to focus on those companies that you can see clear journeys towards generating incremental revenue through AI. And I think the best way to do that is companies that have rich existing data sets from which they should be able to monetize.